I think we had all got questions in our mind after the previous presentation, so I wanted to start off with something a little bit more interesting than jumping straight into getting opening remarks. I wanted to understand where you're all coming from. You're all experts in your fields. You've been following Europe, its competitiveness for a long time, looking at the international markets. So how many people here feel that they truly understand the Chinese economy beyond the coastline? There you go. We have a strong answer. How many people here believe that Chinese companies acquiring international assets are backed financially by their government? Don't be shy. Raise your hands high. Okay, that's a majority. And how many here are worried about the impact of Chinese corporate takeovers specifically here in Europe? That does interestingly set the stage and relatively predictable, though I am surprised that in this audience, question one got nobody to put their hands up. So I think the big question to start off with, Koen, why don't we start with you? Myth busting. What is it that we need to know about China that we don't know about China and that we're missing in the headlines that come out in newspapers, in magazines like mine? What is it that we should know? Biggest myth to bust.
Biggest myth to bust. So I think one of the main issues with dealing with understanding the Chinese economy is that we have relatively limited insight and relatively limited data to go on and relatively limited knowledge of the level of trust that we can have in this data. We can collect data centrally with the databases that are available now. And if we look at that data, we have to be relatively confident on how we are able to assess that. So I think that's one of the major knowledge gaps that we have at present. It's not really a myth to bust. I think when we look at the Chinese system, we can see a remarkable change over the last 20 years. And that is obvious for everyone who visits China and who follows at least some of the reports coming on the analysis done on the Chinese economy. What we do not know for certain is how sustainable all of these developments are. And I think for that we need a more thorough, more serious understanding of the issue of debt, indebtedness of Chinese banks, of the real value of knowledge produced in China, which we can see is improving. It's also improving in quality. But the exact nature of that and the impact of that on real innovations is something that is I think still not properly understood. And I really liked the previous presentation for giving some fairly high level analysis, challenging some of the views that I personally have as well. So thank you.
Sherry, you lived in China, Refinitiv deals and data. What is the big myth to bust for you?
Yes, thank you. And I do feel like having lived in China for 3 years, I've been back in Europe now for 2 years. And I think one of the myths, I'll give you two, one being quite macro, which is that there's only one Chinese way of thinking and that the Chinese move as a complete force. I think that having worked with a number of incredibly clever government officials throughout various stacks of the government in China, I think that there, over the course of the last 5 years, has been a lot of interesting dissent throughout some of the ranks, just in terms of expressing different opinions. So I don't think it's 100% groupthink, and some people, perhaps it's perceived that way from some of the outside. So that's kind of a macro piece to think about. And the second one is slightly more specific. So if we're talking about data, I think that one of the other myths is about the Belt and Road. So everyone talks about the Belt and Road. I've been talking about it ad nauseum for the last 5 years since it was announced in 2013. And I think there's a real perception that this is a Chinese in 100% Chinese involved policy. And of course, it came from Xi Jinping, and it's very Chinese driven, etc. However, at Refinitiv, we've actually done some studies on the data, and we have a BRI Connect infrastructure database. And what it shows is actually a lot of European, American, and international companies are actually heavily participating, either as financiers, EPC contractors, design engineers, etc. So, you know, this just being driven by the Chinese, I think, has evolved into quite a number of countries and companies being commercially involved.
Luisa? I think the mic is not working. Thank you.
No, it's okay. Now it should be working. Yeah, it wasn't. I think one of the most important questions for business, and European business in particular, is how serious China is about opening the market. We have been listening for many years that China is willing to open. We are negotiating bilaterally an investment agreement, but in reality, we still need to see concrete and meaningful market openings. Whenever that we see one, the impression we have, and we have just seen one in financial services, is China only opens when the market is already filled or completely filled by Chinese companies. So you don't really have the possibility of competing there anymore. So for us, the most important thing is first to understand if China is really serious about market opening. I think the second point as well is how much China is willing to engage right now in multilateral system and keeping multilateral rules. Because we talked, and in the previous presentation, there was this idea of also China pushing for its rules. But from our perspective, there are a number of rules that already exist. I mean, talking about standards, we have ISO standards. Talking about trade, we have the multilateral trading system. So why push for parallel systems while we have already existing ones? So we would like much more to see China engaged in multilateral structures that exist already, trying to comply with the rules that we have. We might need to reform them, and we are working also with China when it comes, for instance, to the WTO reform. So I think we need, and China needs to show that it can also not just take from the system, because China benefited a lot from the accession to the WTO, and this is good because we all benefited from it. But now it's also important that China shows that it's willing to give to the system. China is a developing economy, only in name, not in facts. So I think this is also something that we need to stress. China is a major world economy. It needs to start acting as one.
Gotcha. Clemens, I would like to get your opinion on how much we truly understand the Chinese economy in Europe, and some of the myths that we need to bust.
I think obviously this is a very complicated country, so it's maybe normal we don't fully understand it. A lot of our institutions, I guess for historic reasons, are based on a certain type of distinction between the public sector and the rest of the economy. If you look at trade rules, or if you look at the notion of subsidies, you know, the idea is you can have a clear boundary between the public and the private sector. I mean, if we're honest, we don't really have that. So this is, you know, this whole debate about the military and so on. So even in our own economies, this boundary is not clear. But in China, it is for us really opaque. So I don't think this is going away. In terms of, but that's why we have difficult time understanding what's going on. So I've done work on the performance of corporations in the past, and I've tried to understand, talking to a lot of people, for instance, what is it that motivates Chinese state-owned companies? there are all kinds of, for the private companies, you would say, okay, it's maximizing profits, so that, and then if you think that that's true, you can make a couple of predictions how companies behave, and then you can look at the data, whether that's right. But for state-owned companies, it's very difficult, really. There are some people who say they are really part of the welfare state, so they go to regions, employ people where there's a lot of unemployed, or where there's structural change, and that's why their profitability is low. This theory says their profitability isn't really low. They are just doing things the government does in the West. But that's just one theory. Another theory is, okay, people want to make careers, so party officials go into these companies and want to make careers, and that has other implications. It's all hard to understand. I think what we need to do in Europe is focus on understanding the impact on us. And that's related to Daniel's lecture. I think we need to, in our debates, we need a better understanding about where Europe will be weak if China is strong, and where a strong China makes us strong. If the economy slows down, Daniel's prediction, the Chinese economic miracle is over, it will slow down. I would say this is a bigger danger for us than a scenario where China continues to grow, because we are so related. And then there's let's say, the military side. If China becomes a superpower, a military superpower, the other superpowers have a problem, it's true. There, we have this conflict, but I think our economic policy debate is going this way. If they become the leader in, I don't know, AI, we have a problem, and that's probably misleading.
Mrs. Zhu, I think everyone here would really appreciate a little bit of clarity. If you can give a bit of a snapshot about what is actually happening in the Chinese economy beyond the headlines, addressing Koen's point about the data and the reliability of it, understanding the slowdown, the state-owned enterprises and the banks. Paint us a snapshot of what we should know about China at this point. And do you think that China is being open enough for the rest of the world to trust it enough with its money or its assets?
Thank you, Chair. Well, China's economy, after 3-4 decades of continued growth at relatively high rates, now it's, I think, in a kind of slower growth mode. We can call it moderate growth. Given that the scale of the economy is so big, and given that China is making a change of its development modes, in the past, well, a lot of the provinces, regional economies in China, they were pursuing high growth in GDP, ignoring what we call nowadays more and more sustainable developments, not giving enough attention to environmental protection and so on. For this year, the economy was growing. For the past 3 quarters, was growing at 6.2%. It's not so high compared to the past, but it's still not too low if you look at this worldwide. Of course, given the very the uncertainty over the world, and we all know that in the trade and economy environments, a lot of certainties are there. So the China's economies, its performance was not doing so good this year, and is still facing downward pressure. For the third quarter, it's already slowed to 6.0. That's 6% already. Well, in the long run, I think the economy is going to be at a more healthy model, given that a lot of attention has been paid now to its sustainability of the growth.
So no stimulus measures, you're going to be focusing on non-performing loans. That is the shift that you are currently referring to. Am I correct in understanding that?
Well, it's a kind of a adjustment comprehensively. It concerns more input to the green economy, more input to the digital economy, and yes, and also it concerns balancing between the private economies and the public, the state-owned enterprises. So we can come back to that a bit later. I just want to strengthen that China's opening and reform, had been successful in making the economic development grow so fast, and now it's the second biggest economy in the world, the first trading nation in the world, and but the reforming process is in a kind of gradual process, as it has been doing all through the last 4 decades. One cannot expect that China will be opening its markets 100% open and without any reservation to protection of its industries. Just like the EU, I mean, we are doing this. We are now. China is opening store wider and wider. We're not doing this because of WTO obligations, because we already fulfilled our commitments in the framework of WTO. But what we're doing now is kind of voluntary opening up. So if one blame China for not being opening quickly enough, more enough, I think the expectation is a bit of just too high. Perhaps it should be lowered some bit, and that way our partners, trading partners, economic partners, may be more satisfied.
Sherry, is that what you're seeing with your investors as well, as Mr. Zhu points out, that the data, it needs to be there, and it also needs to be understood where the Chinese are coming from? What are your clients at Refinitiv asking you for in terms of China?
Yeah, I mean, it's we've got a good bellwether. I mean, as a company deals with 190 countries around the world, and China is obviously the second largest economy. The opening up in, for example, the bond market, the opening up in the equity markets through the connects through Hong Kong, and recently a very small connect between London and Shanghai. You know, this is growing in terms of interest. But not only that, we have to remember that actually some of these investors are getting forced into China as it's starting to get included in things like the MSCI indexes, the bond indexes. So if you are a passive investor, which is actually the biggest trend in asset management globally at the moment, you are actually starting to participate in China. And we're getting a lot of demand for data on trying to ratify and round out an investor's knowledge as the world starts including China in some of these indices, et cetera. And we have risen to that challenge and tried to continue to update data. And the interesting thing is that this is all coming at a time, if you're looking at financial markets, at a time where what is a financial piece of data? You know, what is financial data now? It's not just a stock quote. It's not just a valuation on a bond. It is also alternative data. So Mr. Xu mentioned sort of green and sustainable finance. You know, again, we're getting more demand for data on the environmental and ESG ratings of Chinese stocks, Chinese issuers, Chinese companies, Chinese regions. We're also getting more demand for alternative data that starts understanding the wider economy, so that it's not just a passive investment, that there are investors also seeking some sort of alternative or a alpha, generating alpha around some of the knowledge that they're gaining. But I do think that there are some fundamental requirements to the international investors looking at China, but also Chinese investors looking at the rest of the world. You know, I think sometimes we forget that as well. So when we think about foreign exchange, when we think about sort of the expansion of Chinese private and public entities investing internationally, they're also looking at sort of how it is that they are going to start having to hedge currencies. You know, how is it that they are making sure that they are robust, mature players in the international financial markets. So being able to have that two-way flow is important. You know, I would be remiss if I didn't say that there are big concerns about the ability to have data flow across borders. You know, China has some slightly worrying data localization laws and some data privacy pieces that cause problems for a free flow of data to be able to drive financial markets. So again, I think that there is some collaboration that needs to be done in terms of being able to have some global understanding of what's going to be good for financial markets for data, and of course more widely for data moving across borders.
Koen, if I can ask you this, Koen, how easy is that to achieve when you're doing the research in terms of trying to get the data that you need to give the right recommendations to the folks who will actually do the policy making or the recommendations at the Commission? When you're putting these research papers together, how much trust can you put in the data flow?
So in the report we launched in May, we basically mainly used international data set, WIOT, Bureau van Dijk data, patent databases, publication databases, etc. So there we have access, and we are able to do analysis that will also allow us to compare China's performance with that of the EU and of the US. Within that data, of course, there are issues of uncertainty on the way that it can be interpreted, and also the validity of some of this data, especially when it concerns statistical data or, for example, the value of patent data in China's patent offices. In terms of access to raw data from Chinese organizations, we have not made use of that. To be honest, we have also not tried in this instance. We had different objectives, but I know that it can be a challenge to get access to full insight on government policy processes and also on underlying data. That might be partially a language issue, a cultural issue, but it can also be an issue of perhaps a lack of trust in sharing this data, and that is something that probably for economists as here in the room, and including for people trying to inform European policymakers and European businesses, is something that would be a welcome development if that type of opening would be more would be done to a greater extent. And I know that within the Chinese government there are debates on how to see if they can open more data, more scientific data, more potentially also more government data, to make it accessible at least to the Chinese scientific community. But I think for the interest of insights to the global community of research and economists, and also for improving the quality of the type of analysis that can be done, it would be very welcome if that type of openness extends beyond the borders of China.
I wanted to come back to the point that Sherry raised about not forgetting that we've got Chinese investors coming out. We've had a reaction to companies and takeovers in Europe and vice versa. What has been the experience of European businesses in China, and then looking at the folks who are coming into Europe at this point? And where is the missing link? Are we not understanding the folks coming from China investing here, or are we not understanding them well enough, Luisa, when we go there?
Well, I think that one of the bases of the current bilateral relation between Europe and China is that we want to strengthen also the investment ties. The question is, we don't have a level playing field at the moment. The Chinese can invest freely in Europe, while European companies cannot invest freely in China. It's true that China is slightly opening up, but one of the big angles of our current discussions bilaterally is what China can do more to open up its, in a number of sectors, to European business. And why this is also important for China. I think the competition is important in the market. It was already said, in Europe we cannot close our market, we need to remain an open market. I agree with that, we should remain an open market. But what we cannot be is continuing to perpetuate the current situation where we are open and they are not. This is what needs to change. So the important, because it's not just a question of leveling the playing field, it's also a question of having more sustainable growth in China. And that's why I think that it's also a possibility opening up to more foreign direct investment, allowing more companies, including SMEs from Europe, and also elsewhere in the world, but especially from Europe, to accessing China's market. It's also important to grow, to have a more sustainable growth in China. We don't think, and of course we might have different views from the Chinese government, we don't think an economy that is based on state-owned enterprises is a sustainable economy in the future. So the current path, if this is the case, that you will continue to grow based on the prominent role of state-owned enterprises, this will not lead to sustainable growth in the future. So opening up, it's also a way of promoting more economic development driven by the private sector, including SMEs. And this is also beneficial for China. I think it's also good for Chinese SMEs.
Clemens, I wanted to come to you because I know you've done some serious studying and research on this, and some of that data that came out about these takeovers has been quite interesting, eye-opening for me. Could you enlighten us based on what Luisa just said?
Yes, thanks. So we did a study on Chinese foreign acquisitions. Precisely, there's another myth. There's a lot of debate about these acquisitions. Some people say, okay, these companies are getting all the money from the government. They can outbid other bidders. So the competition for companies is unfair, or after acquiring these companies, they take out the IP and bring it to China, or they treat the employees badly, or whatever. There are all kinds of ideas around and prejudices around. So we looked at the data that is available. This was deal-level data, micro data. We looked at approximately 2,500 Chinese acquisitions abroad, some of them coming from state-owned enterprises, some of them coming from enterprises which in the data, according to the data, are private. And what we found was quite interesting. So one question we asked, or the basic question we asked was, is Chinese acquisitions different from acquisitions coming from other countries? And the answer is yes, they are in various dimensions. We all know they have more state-owned enterprises, but then the type of target company is different. They buy larger firms, they buy less profitable firms. The average profitability in the data we have of the target company bought by Chinese investors is 0. They buy companies that are much more highly indebted. So the typical, let's say, US-based investor doesn't like highly indebted targets, because what you want to do is let the target pay for the acquisition by leveraging it. So Chinese companies do it differently. They buy highly leveraged companies, low productivity. And we also looked at the prices, and interestingly, so we thought they might pay higher prices. Well, they don't. In some regressions, you find they pay even lower prices, given the characteristics of the firms. In other specifications, you find that prices are not different. Final point, maybe, we then looked at the post-acquisition performance, and it's not very different, but two findings are interesting. Capital productivity is lower after the acquisitions, probably because Chinese companies invest more. and wages are rising more quickly than with other investors. So it's not like, at least in this data set, it's not like they're depressing, they're reducing wages, they're squeezing wages. Wages are higher. The wage growth is higher. Why is that? Maybe because of the stronger investment, maybe because they need to do more to retain people. Because people have, are worried, okay, it's a Chinese investor, what are they going to do? So maybe I better look for some other company or whatever. So that's what we find. My reading of these results is, what's not going on is these, at least not on average, Chinese companies outbidding others. You just don't see it in the data. And what might be going on is Chinese companies being very well financed because they are able to buy these highly leveraged companies. Why? Maybe because they have access to very good financing, which other investors don't. There's much I would conclude from that. I should also say, especially with regard to post-merger performance, these results are econometrically not overly solid because it's a relatively small number of companies in the end where you have the necessary history. These takeovers are relatively recent, so the number of observations goes down. If you look at the post-acquisition history, I wouldn't make too much of this rising wages story. But what we certainly don't see is this outbidding other investors. I would say maybe they have easier access to finance, but they don't pay more.
I know I have a bunch of questions on that, but go ahead.
Maybe two small ones, just for clarification, because I haven't read the report yet. There have been some analysis over the past year looking at investments of Chinese firms in Germany, which indicated that many of these acquisitions are made in strategic sectors, no longer as in the past. The small-scale investments in different services firms, but targeted specifically at sectors which have been prioritized in Made in China 2025, which have specific know-how that is of relevance to the further development of Chinese industry. Is that something that you've looked at and where you want to comment on? The other question is also question for clarification, is we looked at the behavior of these firms post-acquisition, and we see that many of these firms, or at least I don't know the exact number, so I'm not sure if this is statistically robust, but we see at least in some cases that some firms like Pirelli in the tire manufacturer, which was bought in 2015, post-acquisition get access to syndicated loans with large Chinese participation. So this may be another factor of influencing the performance of firms operating in Europe under Chinese ownership.
So we did look at the sectors, of course, and you see, again, state-owned investors are different from private investors. They are attracted to certain sectors like utilities and so on. It's something you also see in state-owned companies coming from other countries, but they're just not so many. And then we did look at what happened after China, Made in China 2025 was introduced, and you do indeed see a shift in the pattern of acquisitions, but again, only for state-owned companies. We don't see it for the private. But for the state-owned companies, yes, they are moving towards the Made in China 2025 sectors. It's there, and you also see the state-owned enterprises focusing more on the BRI countries after the strategy was introduced. It's clearly there. Chinese state-owned companies are instruments for implementing the strategy. You really see it in the data. You don't see it for private companies, or at least in our data it's not significant, but for the rest it is.
I think it brings up the question for Mr. Zhu then. There's a lot of concern about state-owned enterprises, and the financing question keeps coming up no matter which forum I'm in. Is there some clarity you can give us about the background behind these financing? But considering that banks in China have a serious NPL problem, what is the strategy when it comes to the investments that you're doing outside and inside China?
Well, first, we're talking a lot about data and figures. I'd like to give you two figures here. Since the financial crisis, the world financial crisis broke out, China's economy has made a kind of contribution to the world economy. I mean, in terms of growth, at a rate of 30% annually. So you can imagine that the development of China's economy has brought huge benefits to the world. Secondly, the figure, this is to a bit of reflection of China's investment environment, how it is doing now. According to the World Bank, the doing business report, it's an annual report. 2 weeks ago, the bank released its 2019 version. According to the report, China's business environment, the performance, went up by 10 places to reach number 31. And even before, for last year, the China's ranking went up by 32 places. So these are hard figures to show how China has improved its business environment as a whole, including investment environment. So any expectation about China's openness and further opening of this market, or further or deepening of reform, I mean, if you refer to these figures, I just don't want to argue too much, because China has been, I mean, it's not just so fair to condemn or point figures to China, say you are not doing so well in further opening up, because China has fulfilled its commitments, its WTO obligations once and for all. What we are doing is just voluntarily, we're opening further. We are responding to the requests of our trading economic partners, including the EU and America. And we are, China's opening up further, just constantly. And as I said, it's in a kind of gradual process, but it's doing constantly. Regarding Maithreyi, your points regarding state-owned enterprises
and financing of
financing.
Yes, please.
Yes. Well, here in Europe, you also have a lot of state-owned enterprise. In my view, state-owned enterprises are not so different in China from what you have here in Europe. I mean, yes, it is state-owned, but these any state-owned enterprise, they are in China or in Europe, has to perform. I mean, according to the market rules, it has to be operated according to the rules of market economy, right? So that's China has been pursuing. Of course, there is a problem.
There's a lot of funding there. So I think that's the point that a lot of people are making, that there's a serious access to funding for these companies to be able to go out and spend it, where other state-owned enterprises in France, in Germany, in India, for example, would not have access to that kind of funding.
When we come to funding, the funding does not only go to the state-owned enterprises, it also goes to the private companies. I mean, as long as such subsidy or state aid is in line with the WTO obligations, it's fine. I mean, Europe is doing so, America is doing so. If you know the very big WTO legal case, the Boeing and aircraft cases regarding subsidy, it's a huge subsidy. I mean, support provided to these two aircraft companies. China, yes, I won't deny that there's a lot of subsidy there from the state going to the state-owned enterprises, but also going to the private companies. I mean, yes, what China would like to ensure is that it, as a WTO member, the subsidy has to be in line with its commitments, is the WTO rules.
If I can,
Second,
if I can interrupt and just let Luisa respond to that, and I do want to take a few questions from the audience before we move on to how we can actually work together and take away some of the fear levels that seem to exist across the board. So if I can let Luisa respond, I'll take some questions from the audience. Perfect. And then we'll continue the conversation.
I don't want to enter here in a ping pong or a tennis match, but there are a few things that need to be said. I mean, the EU Commission normally publishes every year a trade and investment barriers report. The last one, China, was top. Was the country that created more trade and investment barriers for European companies. So that's a fact. The second thing is, of course, and we are bilaterally talking about ways of eliminating these barriers. So there are ways, and the issue, okay, China complied with all the requirements in the WTO. Let's not even argue about that. The problem was that when China was a member of the WTO 20 years ago, China was really a developing economy, and now is a major economy. And that's the reality that has changed. And what we are asking also is that the relation, at least between Europe and China, reflects this change in the Chinese economy. And I think it's in the interest of both Europe and China. We should not stay where we were in 2000. Things have changed. We are in 2020 almost. So we had to adjust to the new reality. My final point on financing, it's not just WTO, it's also OECD rules. What we see very well around the world is not only in Europe, it's in Africa, it's in Latin America. It's Chinese companies are indeed having access to finance under rules that are not necessarily the same that we have as Europeans or other countries. So it's not just WTO, it's also OECD rules. And this is important. It's coming back to what I said in the beginning. We have international rules, and we expect China, as a major economy, to start playing by the rules and adhering to these rules as everyone else, as major economies are. And this is not to undermine China. On the contrary, it shows that China has evolved, is a developed economy now, and is, at least in our view, an economy that is able to comply by the same rules as Europeans are.
And that brings up a whole big question about the three partners and the one that we haven't even spoken about across the Atlantic, and how all three need to be speaking to one another in a much more clearer fashion. Let's take those questions now before we go into how do we actually connect the dots. One here, one there, anyone, and one at the back, so we'll take three. And then we'll come back to some questions here. Please do introduce yourself.
Yes, my name is Yolana Mungengova. I'm a member of Cabinet for the EU Trade Commissioner, Madame Cecilia Malmström. First of all, thank you very much for this very enlightening discussion. I would like to contribute with two more terms that haven't been mentioned yet. Lack of enforcement as regards EU investors' rights on the Chinese market in comparison to the right of Chinese investors in the European market, and then the issue of values. Because throughout trade policy over the past 5 years, we have tried not only to promote our interests, but also our values. transparency, respect for environmental commitments, respect for labor rights, and also, for example, issues that are very, let's say, important for data flow, and that is privacy, which you have mentioned yourself. I am not exactly sure whether at this moment in time we see eye to eye on all these aspects with China. And I think that transparency can be an element that would help. If we would have more transparent information about the data that China is, let's say, producing and eventually is sharing with the outside world, we would know better what are the conditions in your public procurement market and how to actually access it, whether you have exactly that transparent information about our public procurement market. So transparency is maybe a solution, and it's up to China to decide to embrace it the way we did as part of our trade policy,
Right.
or not to do so.
Next question, and then the question at the back. I'll come back to you, sir.
Yes, thank you. My name is Francesco Di Lodovico. I'm directing the Brussels office for the European House Ambrosetti, an Italian private and independent think tank. I have a short and straight question to the representative of China government here. What do you see as most probable and most close in terms of probability, in terms of outcome, positive outcome, between the bilateral trade negotiation US-China and EU-China? Who is first and why?
I'll get back. I have the question. And the last question at the back, please. I think the gentleman at the back with the glasses. You had a question, sir, in the booth.
Okay. My name is Walter Mönig. I'm from the German Federal Ministry for Research. I would like to hear the panel's opinion about the long-term strategy of China. I'm of the opinion that China is thriving for autonomy. If you look at different markets, be it hydroelectric power, high-speed trains, automotive, iPhones, whatsoever, you can always see that China is welcoming Western companies so long as it is technologically catching up. And then you see Chinese companies which replace all these items. And in the long run, China will be completely independent from all these imports. And therefore, I share the view of Mrs. Santos that there is a real problem, and China is opening their markets when all the Chinese companies are there, ripe and competitive. And well, this is a question. Do you share this view also with regard to the 2020 strategy and the world leadership which China will have in, let's say, 2050 or so? It is in the papers. Do you share this view, or do you think the Krugman view is true that, let's say, multilateralism is always good? But in the case of China, where you have a system of state capitalism, I think this holds not.
So let's start with the last question, perhaps, first, because it brings in the US element here, because that is undeniable, as does the second last question. What do you all think is the long-term strategy for China? Are they trying to be autonomous at some point, or is this going to be a true conversation between the three key parties in the world at this point, the EU, the US, and China?
Maybe I can start. I will present some of that material in the next presentation as well. I think if we look at the number of sectors that we've analyzed over the last 10 years, we do indeed see a strategy that begins with knowledge transfer, then a push towards domestic dominance of domestic firms, and then perhaps an opening up. And I think that strategy is also potentially part of the longer term strategy that you refer to, the Made in China 2025 strategy, where at least semi-official targets have been put forward of the share of the domestic market that should be captured by Chinese firms in in the short and medium term. So we might not be surprised if a similar strategy is followed also, or attempted to be followed also in other fields.
Sherry?
I think if I've got the question right, I mean, is there a drive towards China's desire to be more autonomous and be able to, you know, create a domestic market being actually the big driver there? I totally disagree. I think that there's, a real sort of, my impression is, China is incredibly diverse. I mean, we may go to China and see Beijing and Shanghai, but, have you been to Dongbei? Have you been to Heilongjiang? Have you been to Yunnan province? Have you been to, all of these places that are actually, don't get me wrong, they're all part of China, but they're very, very different from China. So, we talk a lot about Europe and all the differences within Europe. China as a country has a huge amount of diversity in terms of its growth, in terms of its experience, in terms of its culture, everything. And so, therefore, I think that if you're talking about autonomy and trying to create sort of an internal market for China and closing borders almost to competition elsewhere, I just don't see that as being the driver here. I think that, if you look at the financial industry, which is obviously one that I've spent a lot of time looking at, and technology, two industries that, are pretty hot in terms of thinking about China. There are, great examples of, China looking at opening up. And do you think that this is for the good of the rest of the world only? No, it's for the good of China as well. If you think about developing a capital market that has a much more mature, robust ability to transact, this is a decades-long plan. And if you think of China as being this dashboard of all of these different levers that can be pulled, with the understanding that there's also an underlying concern about social unrest and differences between the West and the East of China, etc., it's like you're starting to pull something very slowly, and a light will go off over here. Bing, 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 here's a problem. And you have to actually move over there and try and see how it is that you can change a policy in order to be able to mitigate something that all of a sudden, bing, 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 there's a light going on over there. I think we sometimes, lower the barrier of our understanding of the complexity of this. I'm not suggesting we give, China, the second largest economy in the world, any pity here. But I'm just suggesting perhaps a little bit of extra understanding. And some of this opening up process, you mentioned the third party and all this, being, the US or the Americas or whatnot. Frankly, I was in the room when Yi Gang, the current governor of the People's Bank of China, were talking about the opening up of the financial system. He was incredibly explicit, and he dealt with a lot of the different areas of the economy. This was nearly 2 years ago. Asset management, credit rating agencies, insurance, securities, payment processing, the list went on. And not all of these were ready for foreign investment to come in. These were not all completely ready for competition, really. And so I think that there are some signs there that there is a willingness to open up and to maintain sort of that China as a huge domestic economy becomes more balanced by its reaction to the rest of the world. If you think about the savings rates we saw earlier, where are they going to be investing in? I think there's a real understanding of a creation of a potential real bubble within the Chinese financial market if they don't create permeable membrane to the rest of the world. It's just a question of how geopolitics and how those little lights start going off in order to make it a long-run goal, not something quarterly that you can look at.
Luisa, your members have been in China for a long time. What did they see and tell you about what they think is the long-term strategy here? It brings up a good point about that savings rate. Where are they going to invest? What's going to happen next? Are they thinking longer term? Do they want to be autonomous? And if they want to do all of this, brings up the first question of enforcement, which we'll come back to. But tell me what your members are thinking.
Well, I will try to touch all the points that you raised, including the question of the US that you raised at the beginning. I wanted to be very clear here. We want to continue to be engaged in China. I'm talking about European business. We don't want to give up. We don't want to leave China. We want preferably even to increase. We can't
afford to leave China, let's be honest about it.
We want even to increase our presence in China. what we are asking, and we are fully aware of the complexity of China. The development is quite different across the different Chinese provinces, and we know that China is also facing some of the challenges that we are facing: climate change, demography, growing, aging population. So all of these are also challenges that we have in Europe. Now the question is, we think that China has been telling us for a long time to be patient, and the European business was patient while the growth in China was very high. Now that the growth is slowing down, we are less patient because, of course, the problems are becoming much more important. And we also think that lately, I come back again, the model of development too centered on state-owned enterprises is creating problems, not just for European companies, but also for Chinese companies that are not driven by the state. And I'm also, and not only the state-owned enterprises, I mean, we are extremely concerned by, you know, this idea of having social credit system for companies. This is a key issue, and it really brings a lot of red lights to investors in China. What is going to happen? Because at the moment, we don't have clarity on this. What will be the role of this system? How much will impact the decisions that should be decisions driven by economics, by the business, not by, I don't know, policies of the government of China? So there's a lot of uncertainty here that is having an impact on the business and the decisions to invest and do more in China. Coming back to the role of Europe, China, and the US, of course we are following what is happening between China and the US. We think that the three of us should have actually a good and balanced relation. This means we are not in agreeing with the US approach of putting duties on China. We don't think this is solving any problem. On the contrary, it's creating much more problems for everyone, for China, for the US, and for Europe. So we don't think this is the right approach. On the other hand, we insist, I think China has the ball. China has the ball. It's up to China. I mean, we are ready to play, but we are ready to play football according to football rules. We don't want to play rugby while thinking we are playing football. So we need to play with the same rules, and we need to see signs from China. We are ready to play your game, the same game. We can adjust, we can fine-tune the rules, but the rules have to be the same. And this is what, for the moment, we are not seeing, and we are asking China to be clear on this.
Mr. Xu, I think that really does bring me back to you, because the two questions that were posed in the audience really are for you. One, again, is a question of transparency and, of course, of enforcement. The red lights that Luisa talks about, Sherry talks about the long-term vision. For people to buy in, they need the comfort of knowing there's going to be enforcement of the rule of law, there's going to be transparency. If you can answer that question of, you know, what do we do about the enforcement and the concerns about enforcement? And also the second question was about the probable outcome of the bilateral relationships between China and the US and China and EU. Do you see them as separate things? Is one a hedge against the other, or is this going to be a true, let's call it a triangular relationship? Or are we going to get squeezed in the middle here in Europe between whatever is going on with you and the United States? Transparency, enforcement. Yeah, so the question is about the red lights that are being raised, about enforcement of the rule of law, about transparency in terms of the information flow out of China. How do you reassure investors who are coming to China and countries you're going to invest in about both aspects?
Okay, so China's efforts in improving its business environment. One important aspect is to enhance transparency. First of all, the laws, regulations, not only the basic laws, but also those implementation regulations. They have to be complete. They have to be in place. So that's why China has recently revised its foreign investment law, and it's also followed with the implementation regulation, which is now inviting comments or opinions from all parties, including the EU. So by revising the investment law, I think foreign investors will be given more transparency, more clarity in its future investment operations. On the multilateral front, well, transparency is the basic rule, basic principle of WTO. And China is in the multilateral trading system. China is also trying, to through cooperation with its trading partners, trying to enhance the level of transparency. That's why China was cooperating with the EU in its, in the EU's joint joint proposal for reforming of the WTO in that aspect, in improving the level of transparency. Of course, China has its own initiative on WTO reform regarding the other aspects of.
And what do you make of the second question about the probable outcome of bilateral relationships between the US and China and EU and China? And which, in your opinion, is more important to China?
Well, is the ongoing trade war between China and the US, and actually also the trade conflicts between the EU and USA will make people think that what kind of world we need. In the economic and trade aspects. Okay, and what kind of China people would like to have, or what kind of US or EU people like to have. When it comes to China, you want a more open China. Well, you want China to be engaging more and more in multilateralism, but in the meanwhile, you're closing your own door. Okay, you're practicing unilateralism and protectionism. So this is a very frustrating.
Just to clarify, are we referring to the EU here or to the United States when you're talking about others closing doors? Would you be referring? Well,
obviously, America is upgrading its protectionist moves, right? But we also notice that Europe is closing up its door on certain aspects. When I think some colleagues also mentioned the measures regarding public procurement and so on. Not to mention in the past the anti-dumping law modification, so on, and all these, if you add up, would give an impression that Europe is not opening a wider store like China is doing, but is closing its door to a certain degree. But we still trust that the EU is an open economy. EU advocates multilateralism. So that's why China is working with the EU in such framework. China and the EU has a kind of joint working group on WTO reforms. Both sides have very high anticipation to achieve tangible results.
I have a question for you, Cleanse. The entire question seems to be about competitiveness. If the Chinese believe we may be becoming as protectionist as the Americans seem to be heading down that road, how do we then be competitive without closing our doors? Because many of us don't believe we're closing doors. How do we keep that level of how do we keep the level of competitiveness? And do we need to speak with a stronger, united voice so that we are also seen as one unit rather than 27 countries at some point? And I'm saying 27 for now, just to be politically correct. It's 28, 27, depends on, okay, we're still debating this, so we'll stay with 28. Let's stick with 28 for now.
I think it's a tricky question, really. I think one way of looking at this is to say, okay, the EU needs to be more united, and then it can tell China, okay, we are closing the door unless you are opening the door. So there's this theory that, okay, if the EU is united, for instance, if we had a common investment policy, we could pressure, we could negotiate hard with China. That's one way of looking at this. This would suggest we need more Europe, not just in trade policy, but also in investment policy, and we're discussing this at the moment. The other theory is to say, well, China is not going to let itself be pressured. So if we close the door, they will just go on, and if we open the door, this won't make a big difference. If that is right, the implication for the EU is different. Then we should say, in fact, it's good that we don't have a European investment policy, because this would only be a tendency to really use it. If the power is there, it's likely to be used. So then we would say, okay, being a bit fragmented is not bad, because it means we will remain open. I mean, being open unilaterally, we know that as economists, is better than everybody closing their doors. If the behavior of China is given, it's better we open our markets than we keep them closed. So that's true, with a grain of salt, but that's basically correct. So it really depends on what we believe. Maybe, again, a question to you. Are you going to let yourself be pressured if we are tough enough on China? Or are you just... no, I'm not serious, but I think it's a real question.
Feel free to answer that, Mr. Xu, if you want.
It's a real question. Would China have a tendency to open its door or make concessions more easily if the EU was tougher and said, you don't open your door, we will close ours? I don't know the answer to that question, but I think that's...
Sherry, then first, Mr. Xu, please respond, and then Sherry.
I think, China, as it has always been doing so, China would continue opening its door wider and wider, but only according to its own time schedule, not under any pressure, not from the United States, not from the EU. So your question, is that if the EU is tougher, will China be open more quickly, or just like perhaps you would think of the United States, what they are doing, and the EU would do the same? If the EU I don't believe the EU would be doing the same, because EU is after all different from the USA. But if the EU would do so, I think it would be kind of a very short-sighted move to do so, because in the end, both China and EU, both EU and China, I should say, would lose. It's always China's philosophy that different states should work together to achieve win-win scenario, not kind of zero game we should play. And we also advocate that we should work together to achieve common prosperity. common prosperity, not kind of, well, the EU win or China lose or the other way around.
It's not a zero-sum game, Sherry.
I just wanted to sort of throw something out there in terms of a challenge when we talk about Europe, either 28 or 27. There's also a number of...
With the official 28.
Official 28, here we go. Well, but there's also a lot of other numbers. You know, what about 17 plus 1? Does that ring any bells? So, you know, China's, you know, working with 17 of the Eastern European countries in terms of developing a relationship, thinking about trade, thinking about sort of how it is that, you know, cultural and technological exchange, etc. Then you think about, you know, the Belt and Road Initiative. There is one G7 nation that has joined the Belt and Road Initiative in terms of signing up to the MOU. It's Italy. Of course, politically, there's been changes in Italy as well, so it's one to watch. And then you look at sort of something that Mr. Xu has mentioned a number of times on this panel, we've kind of skittered over a bit, but is actually really core to China, which is sustainable development, green finance, sort of promoting that way of financing the future. And there are some really strong ties between the UK and China on that front, and France and China on that front, in terms of looking at sort of standardization potentially. Of course, the EU's taxonomy and the EU's efforts on regulation and nomenclature around green finance are much further ahead than most places in the world, in my opinion. But actually, the relationship to discuss that with China is at that table, is at that beginning table of how it is that influence is made as well. So when we talk about how it is that China is working with Europe, I think we need to be a little bit reflective on the fact that there are a lot of different pieces that are moving ahead in different ways.
I want to get two very quick questions from the audience before we wrap this up, because I am cognizant of the fact that we're running over, but I'm stealing some time from your coffee break. Any questions from the audience? Otherwise, we'll wrap it up. Great, everyone really wants their coffee. So we'll get the comments that to close this and wrap this up, really frankly, are where do we go from here? Because we are, at this point, the third wheel between the US and China, and whatever is happening in the global economy in terms of slowing down internally in China. And here, there are concerns as well. We got the report this morning and the forecast for the EU. So we know the situation today, long term, medium to long term. How do you all see the relationship between China and the EU getting stronger? How do we get there without a lot of the debates that are ongoing at this point? What needs to be done by both sides, and what needs to happen in the third party across the Atlantic to make this conversation constructive? Who wants to go first? That's a doozy of a question.
I'll go first because then someone else can be smarter after me. So it's a strategy. You mentioned being a third wheel. I think when you look at it from a China perspective, China's the second largest economy in the world. I think we are a wheel. Because there are multiple relationships that are being developed that we haven't even hit on. We couldn't possibly in a panel like this. You know, what about the relationship with the Middle East? You know, the Middle East accepting RMB for settlement of oil and gas products at the moment. You know, what about the relationship with Russia and thinking about trade there and the security of LNG coming from Russia, and thinking about the relationship with the Arctic and the Arctic trade routes, which are a very hot topic as well. If you think about sort of the Belt and Road Initiative, you know, I didn't realize that Peru and Argentina and Chile were on the original Silk Roads, but hey, they're part of the Belt and Road Initiative. So again, you know, if we only look at this three-wheeled cart, I think we're not looking at it from the perspective of our partner here, or our potential partner here, which is China. And if we're looking at it from a Chinese perspective, then, you know, actually that might be an interesting way for us to just reflect, you know, to answer that question, which of course I don't have the answer to, but perhaps it's a question of saying, what are the absolute priorities for China? You know, there's a lot of indication about that. There's a lot of direction from the top. And then what are the top priorities for the EU, for Europe? And where is it those two actually really align? Starting from there has always been a winner in terms of being able to at least speak the same language, push together. There will always be a long list of things that we will not align on. But perhaps we start with the ones we do.
Koen?
So, speaking from my personal perspective, not representing so much. I fully agree that Europe would benefit, and the relationship, perhaps having a constructive relationship with China, would benefit from speaking with a single voice and having a clear idea of strategic objectives. This would allow us to be an important wheel rather than a long tandem of wheels. And I think in that light, and also reflecting on the US, I think there's a couple of interests that the EU probably shares with the US when it comes to relations with China, but there's also a number of interests that it has of its own. And I think this more strategic reflection and a common reflection on that is instrumental in engaging proactively, strategically with an important partner as China clearly is in the economic sphere, but also in a number of other spheres that we have to work together, and we will continue to work together.
Clemens?
Yes, I fully agree. Of course, we have to work together. And I have to say, I'm a bit worried, but that may be very subjective and due to the area where I work. I'm a bit worried that Europe may actually fall back in being connected to China. If we look at the academic world, at the world of research, I think there is a clear dominance of US-China relations if you compare them to EU-China relations. So I think the EU needs to do a lot more to be involved in Chinese research, to have exchange with China, bring people here. I think exchanging people and exchanging investment is the best way of making sure that relations are really constructive. But I simply think Europe is not doing enough to better understand China, to foster exchange of people and trade with China. I think it's the best way of making sure, this is going to be a prosperous and peaceful relationship.
I'm going to give you 1 minute.
1 minute, and it's targeted at the audience, but it's following up on Clemens' remark. I think when we talk about people exchange, I think that is very important, but it should no longer be unidirectionally of Chinese people coming to Europe. And I think a lot of the economists in Europe, the scientists in Europe, should also start going for longer periods of time to really learn about the Chinese system and to bring back that knowledge to Europe.
Luisa?
Well, talking about
considering
areas,
business has been there for a long
talking
time.
about areas of cooperation, and of course we are cooperating on multilateral rules, on WTO. I think one area where we're all interested is the digital sphere. We're all discussing right now in the WTO context the WTO agreement on e-commerce. So I think it's in the mutual interest of everyone to have common ground there. We need digital governance, and hopefully we agree on that. It will not be easy, but I'm still convinced we can. There's another area where we mentioned it already, where China and EU have a role to play, and that's in climate change. China is the top global emitter, let's not forget about it. But China is also very much engaged in addressing the problem, and I think Europe, together with China, we can also give an example here to the US, and especially to this US administration at least, because if we go to the states in the US, many of them are doing a lot. But I think here China and EU could do more. So these are areas where we should cooperate. On the other hand, I think that I come back. We need to recognize China for what China is today. It is a competitor. The US is also a competitor, let's be clear. So we cannot continue this idea of, oh, let's unilaterally open to China. No, we are not unilaterally opening to the US either. We are doing this with developing countries, with LDCs, least developed countries, but not with big economies. So this is the way we need to see China. We need to see China for what it is today. It can be a partner, but it's also a systemic competitor. And we need to adjust also our policies, and I repeat again, this is not bashing China, it's recognizing that China has developed as well. that it is a growing power, and we need to adjust the way we deal with China and the way China deals with us as well, but continue to engage. I think that's the important message for the future.
Mrs. Xu, final word to you. When it comes down to a relationship where it's about competition, the title is Europe's Competitiveness and the Rise of China, the fact that you are a partner, you are a considered superpower in the world now, how do you see this relationship developing, and what is it that you see China compromising on and not compromising on in the medium to long term? Final word.
Actually, I think we Chinese just quite flattered by the word itself, rise of China. I think China is still a long distance before it really can rise. I mean, we never use the word rise, but we just use the word development. The development of China does not constitute any threat to, not to the USA, not to the EU. As I just mentioned, it's peaceful development is in the genes of the Chinese nation. I don't want to elaborate on that. Madam Santos mentioned the word systematic rival. This it appeared in the EU policy paper released some few months ago. We don't agree at all that China can in any way be a systemic rival to the EU. I think that way the EU is playing up the threat of China. Sometimes people talk a lot about say the forced technology transfer, or some other words in the ideological aspects, which I think is like a kind of a witch hunt. It does not exist, and you want to find out. You want to find out how big, how challenging China is, and how much threat China may impose to the EU. I mean, it's not that case, okay? And regarding China-EU cooperation, of course, it's beneficial to both sides, and that's the only way out. Can we seek frontation? And we don't need to seek that way, frontation. And why should we do so? We can cooperate. We can solve problems through consultation. Why should we come to trade wars, to confrontation, to even kind of useful, forceful way? So far, our bilateral cooperation momentum is good. I think we have disputes, but we have very good channels to sort out. Only this week, a lot of bilateral events are happening in Shanghai, in Beijing. Yep. Yeah, if you notice the China Import Exposition, the second session is going on, and the BIT, Bilateral Investment Treaty negotiations, having its 24th session in China, and the GI, Geographic Indicators Agreement, has been signed. It has been initiated between the two trade ministers of China and the EU. And on the bilateral front, China called the mini, the informal WTO ministerial meeting in Shanghai. I mean, from all this, yes, we have a strong momentum. And I think so. What we need to see is the positive aspects of our cooperation, not to exaggerate the negative aspects.
So focus on the positive, don't exaggerate the negative. That's an excellent note to end our session on, because I know everyone wants their coffee. It's been a long day. Thank you to my wonderful panel. Please give them a round of applause. Frank opinions all around.